Well, good morning and welcome to today's webinar. My name is Peter Frank and I'll be leading our session today. We'll be looking at a basic introduction to Church360 Ledger. This will be an overview webinar, so we'll be kind of starting at ground zero and working our way up. This will not get into a real advanced financial accounting. This is to look at the tool, look at the software itself and how to get started. So I hope to cover all the major features of it and answer any questions that you might have along the way. Again, my name is Peter Frank. I'm the Senior Manager of Marketing Technology here at Concordia Technology Solutions. I've been with our team for about 6.5 years, I think now. I have been with Church360 Ledger from the beginning. I remember when I first started with the team, the planning had just started taking place on Church360 Ledger. And so to see it go from sketches on a whiteboard all the way to a software with hundreds of churches using it on a daily basis is very exciting for me. So I'm happy to share this with you today. I am by no means a financial expert. I'm in our marketing department here, but I do love working with numbers and spreadsheets and helping out at the church. I've been very involved through our budgeting process at my church, and so it's nice to be able to share some of my personal experience using software like Church360 Ledger and train you on how to use it. My information is there on the screen. You can reach me at my email address, peter.frank@cph.org, or you can call my phone number, which will take you directly to my office phone. Don't call it right now. I have it forwarding to voicemail. I've had a few people try that to ask me questions during the webinar, and that just doesn't work. So that's why I always forward to voicemail. All right, a few housekeeping items before we go too far. I am planning about 50 minutes for a presentation. Now, given that we're starting at the ground zero and working our way up, I have more than enough information to present today, but I'm going to try to cap it at 50 minutes. Those last 10 minutes will be for question and answers if we have many in the queue. I might go over that 50 minutes if I don't have any in the queue because there's always more than enough information to share. But with that in mind, I do ask that you ask questions throughout. That allows me to see what's waiting for me at the end of the presentation, and then I can kind of judge accordingly. So if I need to go over to show a little bit more, that's fine because I won't be cutting into the Q&A time. Now, we are recording this webinar and we'll be sharing this recording after the fact. So if you are one of those who are watching afterwards, I'm sorry you couldn't join us live, but I'm glad you're still able to get this information. And if you are here live right now, thank you very much for being here. The recording I know can be helpful if you miss a spot or if you want to review a part. Sometimes I go a little bit too fast. You can always rewind and watch me again. So if I am going too fast, you can put a note in the chat and I'll slow down. But the recording I have found has been very helpful for a lot of people just because sometimes watching live, there's too much to take in at once. All right, so a little bit about us if you don't know us. Concordia Technology Solutions is the church administration division of Concordia Publishing House. Sometimes I'll get that question, do you work for CTS or do you work for CPH? Well, yes, I do, both of them. We are one and the same, but we distribute and market our products, our software products using Concordia Technology Solutions, because that makes a little bit more sense than when you think about a publishing house with software. But we are one and the same, and we have been developing software for churches since 1984, which is kind of mind-boggling for me, knowing the technology at that time. All right, so Church360 Ledger is our focus today. It is part of what we call the Church360 suite of products. It's complete church management. Our two other products in that suite are Church360 Members, which allows you to manage member information, obviously by the name, as well as attendance and offerings and all the related data that goes with that. Now, there is some overlap between what Church360 Members and Church360 Ledger does, specifically related to offerings, so that when an offering is given, it's created as a batch for a deposit in Church360 Ledger. So we'll talk about that. I'm not going to go into too much detail right now because that's kind of at a higher level, but we will talk about that briefly. Now, our other product in the suite is Church360 Unite. that is our church website builder. There is not really any overlap between that and Ledger, because Unite is obviously your front side of the church, whereas Ledger is definitely in the back. It's all about managing the accounts, which is not something that is produced publicly on a website, or even really for the members, not publicly, but internally. The reports and stuff should be shared, but it doesn't happen automatically. So there's not really an overlap there. There's a lot of overlap between members and Unite. And if you're interested in learning about either one of those, in the last week, I've had overview webinars on each one of those, and we have published those in our resource center. So you can just shoot me a note and I'll share those links with you. But today our focus is on Church360 Ledger, and there's a few key themes that you'll see throughout. It's intuitive, meaning it's meant for people who are not financial experts, and that is most people in the church. We'll talk about that in a moment, but it's meant to be as easy to use as balancing your bank account, which I know for some people is not easy, but we've tried to make it as simple as possible. It is secure. We use the same security that banks use, but it's more than just secure from outside threats. It's secure from internal mistakes, and we'll look at that and talk about that in a little bit more detail. And finally, it's focused on the church. We know that there are lots of financial software options out there. Most of them are meant for businesses or personal accounting, and church finances are different than either one of those. So we have developed the things that the church needs, not necessarily a business, not necessarily an individual, but what the church needs. So that has been our driving focus as we've developed this church finance software. All right, so I always make some assumptions about people before you arrive. It helps me kind of frame the content. Now, this one's a fairly simple one because it's a basic introduction. So I assume that you're at least familiar with church finances. If you are using this as Church Finances 101, you're probably going to be disappointed. So I'm assuming you at least know a little bit about it. Now, we will cover some details of basic church finances, but we're not going to go into too much depth. I'm assuming you're new to Church360 Ledger. It doesn't necessarily mean you have to be new to Church360 as a suite, but this is a basic introduction. So if you've been using Ledger for a while, there's probably not a lot that you'll learn, although there will be some tidbits along the way. Finally, I'm also assuming you're extremely busy. I assume this for any presentation for church workers or volunteers. So if you need to step away, if you can't attend for the whole time, that's okay. That's why we record this. Your work in the church is far more important than watching a webinar. Our hope is that our software supports your work in the church, but it does not become your work. So those are my assumptions. I'm assuming that's pretty safe. My outline for today is to talk through some of the goals for Church360 Ledger, and that won't take too long. They're very straightforward, but we'll go through that in just a moment. Then we'll do a tour of the entire software, and then we'll take question and answers at the very end. Now, let's jump right into the goals of the software so that then we can jump into the actual software itself. So, like I mentioned at the beginning, I've been involved with Church360 Ledger since its very beginning planning phases. Although it was not my idea, it was a team of people who developed this. But we had these goals go throughout from the very beginning steps all the way through now as we continue to maintain and support Church360 Ledger. First off, we know that church finances are often managed by volunteers. That is not exclusively the case, but almost exclusively in our experience, especially for smaller to mid-sized churches. We know that most volunteers are not accountants. We would love it if they were, not just us here at CTS, but in the church. I know that you would love that if you had a team of volunteer accountants. That just doesn't always happen. So because of the way that church finances work, because the money is coming in through offerings, accountability is extremely important in the church. And that kind of combination of high levels of accountability needed and inexperienced volunteers can create some problems. So we have built Ledger for two primary goals. First, preventing the ill intention from doing wrong. We don't want our customers to be the ones that end up on the news where there was a volunteer who embezzled money from the church. Now, there are lots of different ways to do that. Those who are ill-intentioned can be very creative, and we can't prevent all of those, but we can do our best to make it difficult for them. And so some of that is based on permissions and not making it easy to gain access to information that they shouldn't have. Some of that is based on the audit log, making sure that every single line is tracked and we know who did what. But there's another side of that that has been our kind of overriding purpose too. We want to prevent the well-intentioned from making mistakes. And I think this probably occurs far more often than that first scenario, where you have an inexperienced volunteer who doesn't know exactly what they're doing and makes a mistake. And usually these are not catastrophic errors, but they're time consuming and they can require other people to get involved to fix it. And you could be making poor decisions off of this. If you are expecting to have a certain dollar amount in a fund to kind of cover a purchase and the dollars aren't there, that creates a problem for the church. So we want to prevent those kind of things from happening. So we designed Church360 Ledger to increase the accountability in both kinds, for the preventing the ill intention from doing wrong and preventing the well intention from making mistakes. So we were designed to permit mistakes. So the basic introduction for today will go over a number of key areas. First off, we're going to look at how to set up a chart of accounts, and we'll go through a basic chart. We're not going to set up a whole chart of accounts. We're going to go through the process of how to budget. We'll go through transactions, credits and debits, and all that fun stuff. You don't have to know credits and debits to enter transactions, but it does it all appropriately for you, and we'll cover that in a moment. We'll go over reconciliation, basically the process of balancing your books, and then we'll look at reports. So that's the goal for today. Let's go ahead and get started. So what I did to begin is I went to our website, 360ledger.com, and I'll zoom in a little bit because I don't try to zoom in. There we go. There we go. Okay, so if you would like, you can follow along. If you're not already using Church360 Ledger, you can go and start a free trial. And we'll have this link at the very end. We do a free 37-day trial because that gives you essentially a month and a week. So you can do a whole month's worth of transactions and have a week to reconcile your accounts. So that's how we do it. You can start up, and what I did is I went through and I filled this out, and then I got an email welcoming me, and when I clicked on the link, I got to this screen. So we'll start off here basically at the very beginning as if you were starting a trial. So I've entered in my email and a password. I'll go ahead and continue moving forward. So this is where we can put our church name. And so I'm just going to go with Hope Lutheran Church. And I'll put our CTS number and everything in there. St. Louis, Missouri, 63118. All right. So that is what it needs to get started. And then I get into basically two paths. My first path is to create my first book. My second option is to import Shepherd Staff Finance Database. Now, I know that many of our customers are coming from Shepherd Staff, our PC-based software, and we're still actively maintaining that, improving that. We've got a rewrite of that. That is a great software solution for people who want their data on their servers, whereas Church360 is the alternative, having it on web servers. So if you're coming from Shepherd Staff, you can import your database. There are a few caveats to that. One, if you are using dedicated accounts in Shepherd Staff, we have a different way of doing that same process in Church360 Ledger. And in my opinion, it's a far superior way. It's more straightforward and simple for those in the church to understand. Both are appropriate. Both follow basic accounting principles. But I think the way we do it in Ledger is a little bit easier. And our developer and Shepherd Staff has said the same thing. It's just very different, so it's hard to convert. So if you're using dedicated accounts, you can only bring in your existing chart of accounts with balances. Whereas if you aren't using dedicated accounts, you can bring over all your transactions. So we're not going to get into that today, but if you need any assistance with that, our support team is happy to help. And their information is actually right here. So if you get to this point and you don't know what to do, you can just give them a call. But today we're going to go with our set of our creating our own books, basically from scratch. And a book is a set of accounts. So I encourage you to think about it at your church. If you manage all the funds at one level, or if there are multiple levels. So think about it this way. If you have a church and a school, do you do their budgets together, or are they separate? If you're part of an association school where you are one of several churches supporting the school, most likely your books are different. But if you are like my church, where we have a church and school together, that is one set of books. Now, even in our situation, we'll have other groups that have their own books, essentially, their own chart of accounts. So we have a men's club at my church that is a fundraiser or a fundraising organization exclusively. So they do a number of things like barbecues and trivia night events and other things where they fundraise, and then they choose how to spend it. Usually it goes to our school. They have a completely different set of books. With Church360 Ledger, you can do really any of those combinations. So if you have a church and school that are separate, you can have two books. If you have a church and school that are together, you can have one set of books. Your account does not limit the number of books that you have, but I'll show you in just a moment the things that are shared among the different books. It's things like users, like vendors, things that are going to be time savers, but it's still all for your church. So you wouldn't want to put a church and a church in here because that's going to have very different kinds of vendors and users, etc. But if it's all at the same location, that'll work. So we're just going to call this the church accounts. And then we can select the starting month. What is the fiscal year? Well, we'll go with a calendar year, but you can pick any year. Typically what I've seen is it's either calendar year starting in January or something like a school year where it might start in July or August. But we're going to go with January. And we're going to enter the start date for the book as January 1, 2018. So I'll go ahead and hit submit, and it's going to create my first book and take me to the chart of accounts. So a little bit about the Ledger interface that I think will help. Let me zoom in a little bit more for you. Up in the top left, if you have more than one book, you can toggle between them up there. On the far right, you have your printing queue, your check queue. We'll talk about that in a bit. Your listing of reports, your settings, your user profile and settings, and then your what we call our omnibar or quick access to your different accounts. There's nothing there right now. We'll get there in a moment. And then your transactions, and we'll cover those in detail in a little while. So all of this will be consistently shown on the navigation so you can get to the screen you're looking for right away. Where we're starting, which is really a key part of any kind of financial system, is your chart of accounts. And we could get there by going under settings in the first option, chart of accounts. So there are 4 types of accounts, and we're going to create a few for each of these. There's assets, liabilities, income, and expenses. And if you're familiar with church finances, that should all sound very familiar to you. So assets are where you store actual money. So think about bank accounts. We're going to set up a couple bank accounts here, and we can do that in a couple ways. We have the option to add new accounts and new categories. Transactions must be processed against accounts, not categories. But categories allow you to summarize totals of accounts. So let's take a look here. If we do a new category, and we'll call this the Bank of Bakersville. That is a category that can carry a total balance but cannot have transactions processed against it. So let's say that at the Bank of Bakersville, we have 2 different accounts. The first account is a savings account. We'll just call it savings. And we have the option of putting in an account number. It's not required. So I'll just put in a few numbers there. But we can't write checks from that account because it's a saving. We can do withdrawals and deposits, but we're not paying from this account. So I'm going to put a 0 initial balance, and we'll hit submit. Now, if you are bringing this in, chances are you don't have a zero initial balance. You can bring over your beginning balances before you enter any transactions. You can't change your beginning balance after you enter transactions. So it's important to get this set up right the first time. And that's where having a cutoff date is going to be a key part of it if you're moving to a new financial system. So maybe January 1 is when you want to start this. Well, you can always change your beginning balances up until that point, as long as you don't process transactions against this. So what I would recommend, if you are wanting to start January 1, I would recommend getting your chart of accounts set up, and then on December 1, begin entering transactions and balance it with your existing system. So you can kind of do two systems for a time, and then really start using this exclusively January 1. That's just one approach you can take. But sometimes that beginning balances can be a little confusing. All right, so I'm going to move this over. I'll drag it so that it goes kind of underneath it in a tree setting. And I'm going to add another account, a new account called checking. And I'll do a different set of numbers for that. I can write checks from this account, but I'm also going to do a zero balance to start. And then I'm going to move that over here. So we have a Bank of Bakersville with a savings account and checking account. We'll talk about restricted funds in a few moments, but I'm going to save these changes and it'll tell me exactly what I've done. I've created one new category, two new accounts, and I've rearranged them a little bit. So I'll confirm that. All right, next we have liabilities. And liabilities are kind of the balancing side of assets, where assets are money that you have, liabilities is money that you owe. And this can come in a number of different forms. But let's say we have a credit card for the church. Let's call this U.S. credit card. That will be our category. And maybe we have actually two credit cards. So the first one will be the church credit card. And we can put in an account number if we need it. We don't have to. And we're going to do a zero initial balance there. And maybe the second one is pastor's credit card. And again, a zero initial balance. So we have one account with U.S. credit card, but there's two different cards, different numbers, different balances. So we'll drag these underneath it. There we go. All right, so I'm going to go ahead and save that. Now, you might have other things like a mortgage or other kinds of loans. Maybe you have bonds in there. Think of liabilities just as money, real money that you owe. Next, we have income. This is kind of the other side of the equation. So income is money that is coming in. It's actual money, but when you're tracking it as income, it's not necessarily putting it into different bank accounts. It's just finding the purpose. That's the way I like to look at it. The purpose of this money is for X. Same with expense. The expense is the purpose of using this money, but it's going out. So let's take a look at a couple different categories. One would be offerings. Another might be income. Revenue might be a better word to use there. Most churches don't produce revenue as you typically think of a business, but we'll talk about that in a second. So offerings might come in under the general fund. And you might have offerings for missions. And maybe you have offerings for the youth group. So I'll move those under offerings. Now, revenue might come in for facility rentals. Something like that. It's exchanging a good or a service for dollars. So it's not a charitable donation. It's money that the church has earned. It might be something for like registration fees. Typically, a church will not have large dollars in revenue, but they'll have some, and you want to track that separately from offerings. All right, so I'm going to go ahead and save those changes. And now I'll move into expenses. So underneath expenses, we can also do categories and accounts. So the categories of expenses might be something like payroll, or maybe you'll have something like operating expenses. You might have another category for ministry expenses. So under payroll, we could do something where it's church staff, or maybe you do like full-time staff. And we'll move that under payroll. Maybe you have another one where it's part-time staff. Under operating expenses, maybe you'll have utilities. Now, you can actually stack categories. So we could put utilities as one category, and maybe another category could be, let's see, actually, why don't we use ministry expenses as another category? We've already created that, so we'll say operating expenses, ministry expenses, and utilities. And then under ministry expenses, we could say something like summer mission trip, or youth group. And then under utilities, we could have something like electricity. And let's add one more. Maybe we could call that internet phone. So most likely your church will already have a listing of these kind of expenses, so you're not going to be coming up with them on the fly. But I want to show the tool and how it can be used to show different groupings and categories of things. You can have, I believe, an infinite number of categories, but that becomes really unmanageable quickly. So I would recommend doing 3 or 4 categories tops. Nothing more than that. It gets overly complicated, and for a church, that's not necessary. But that's up to you. You have the tools to do that. So we'll go ahead and click Save, and we'll confirm all of that. All right, so now we've created our chart of accounts. Let's take a look at some of our next steps. Up here under settings, we have 2 groupings. We have the first grouping, which is tied to a book. The second grouping, which is tied to your account. So under general settings, you have the information we kind of already filled out with address, name. You have your books listed here. This is where you can go and add additional books. You have your roles, users, and logins. We'll look at that in a little bit, and payees, which is vendors. So we'll touch on those briefly, but I want to show fiscal years here. So fiscal year is tied to the book. The current fiscal year is 2018, January to December. If we wanted to change the fiscal year, you can do that here, and you can create kind of a short fiscal year, maybe a 6-month fiscal year if you're going from calendar to non-calendar. This is where you'd go for that, but that's tied to the book, which means if you are a church that has one set of books, like maybe the church itself is a calendar year and the school is a school year, you can do that differently. That's where that division comes in. So if you look up here, anything above the line is for this specific book. And the next thing on the list is budgets. And that's where we're going to go next. Now, as I like to explain and remind our church council, budgets are expected income and expected expense. They're not guarantees. And that's a good thing for expenses, that we don't have to pay these necessarily. Some of them are going to happen. But income makes it a little difficult. You cannot guarantee that that income is coming in. So it's a good practice to kind of plan on these things so that you don't plan to spend more than you plan to have come in. So if you look at budgets, it's broken down. There's a total column and then the 12 months, and we can't quite get it all on one page because I'm zoomed in. If I zoom out a little bit, yeah, there we go. Now it's all on one page. So they're all zeros right now, and this is for 2018. We could always budget for 2019 if we wanted to. And you can see as we switch it, it's also all zeros. Now, there's a number of different ways you can budget. You can change all expenses to this, or all budgets to what last year's budget was or what last year's actual was, and then make adjustments from there. Now, we don't have that data in place. We're starting from scratch. So now I can go in and enter it manually. And there's a couple ways to do that. I could go like to the general fund and say, I'm expecting that we're going to make $200,000 or receive $200,000 in offerings for the general fund, and that the missions fund typically gets about $5,000 a year, and the youth group gets around 10. We could do all of that, and it'll automatically split it up by the month. And so our total shows here under income and offerings, and split evenly across the months. Now, maybe facility rentals, typically by the end of the year, we have about $1,000, and registration fees. We know that we only really have one event for the registration fees, which is Vacation Bible School, and that's going to be in July, and we make about $500 from that. You can go in and modify individual months. In fact, we could even go in and say, well, the mission trips, we get some throughout the year. Maybe we get about 200 every month, but we do a big push in July. And in July, we get about 3,000, and then the rest of the months are 200 or so. Where does that cause us to end up? We're right around 5,200. So you can do it like that, however works best for your church. Now, once you click into a row, you can see that you can actually set that row to be all previous year budget or previous year actual. So maybe you don't want everything to be based off of last year's budget. Some of it's just going to be based off of last year's actual. So maybe you have one plan for budgeting your youth ministry expenses or income, and another way of doing your general fund. We've tried to build as many of these options in as possible. Now, another way you can do it is you can export to Excel. And if you're like me, you might enjoy working in Excel better than any kind of web interface. You can distribute this file, you can kind of manage it, it's not real time. You can do that same thing with your budget. Let's pull this up here, there we go. It'll put it in here. We haven't saved it yet, so it doesn't have those other numbers in place. And then you can actually take this and copy paste it back into your web interface, into your budget here. So there's a number of ways that you can enter in your budget. The important thing is that it's based off of combination of data and what you know is going to happen. You can't expect next year to be the same as this year, but there's some things that are consistent year in, year out. So let's go ahead and just add in a few other things. So let's say we know our summer mission trip is going to be around $5,500. The youth group typically spends their entire budget of $10,000. Our full-time staff equals out to about $150,000, and our part-time staff is about $25,000. Electricity, maybe it's $4,000 a year. And then internet, phone, maybe closer to $1,000. So where do we end up? Well, we have income less expense, or we're coming in about $150,000 short. So that starts to add up pretty quickly. Actually, that doesn't sound right. I think I have a typo in here. 25, maybe not. Yeah, payroll 175,000. Income less expense. Yeah, I think that works out well. So we've entered in our whole budget. Now I can just go in and save that. Anytime I try to do mental math, I suffer. Yeah, what did I do there? I messed up something different. That's all right. I won't worry about that right now. We've got more to show off, but we've entered in our budget. And this is where this budgeting process becomes important to pay a little bit more attention to than what I've done just by typing in numbers. Because when you get to that bottom line, you want to make sure it balances correctly. I know what I did. I did 20,000 in the general fund, and I meant to do 200,000. That makes more sense. It was a typo. Sorry, numbers when they're wrong bug me, but that's what it was. I had a typo in there. So, and that's where it's good to look at that math at the bottom, where you can see, all right, what is our expected, income less expense? Are we coming above or below? If you come like I had there, 150 below, that's a problem. All right, so we've got our budget in next. So where we're going after this is to begin to enter in transactions. So let me take you to the main page here. Again, the navigation stays pretty much the same, but transactions are a core part of what you do day in, day out. So on the home page, we have our listing of transactions, which has nothing right now, but we also have our 4 main categories: assets, liabilities, income, and expense. When we go to assets, the next thing we have is our category, our Bank of Bakersville. We'll click on that. We get checking or savings. We can click on savings, and we see this kind of tree or breadcrumbs. Now in this, what we call our omnibar, you have the same thing. It's just listed out vertically as opposed to horizontally. And so you can see all your different accounts. So if you want to go and see your pastor's credit card, you click on that and you see the breadcrumbs going throughout this. All right, let's do some transactions. We'll go back to the home screen. Under transactions, we have 5 different transaction types, and I'm going to start with the most difficult. Underneath everything else is journal entry, but really all transactions are journal entries. Journal entries adjust your accounts, and it's done through what's called debits and credits. Now, I'm assuming you might have heard of that before, but you may not know that inside and out if you're a volunteer and not a real accountant. I've learned a little bit about debits and credits, but I'm by no means an expert. So I always have to go into, we talked about types of accounts before. I should have shown that up there. I always have to go into my chart. So if you look at this, you can see assets, liabilities, income, and expense on the left-hand side. On the top, you have debits and credits. And what debits and credits do is they adjust your balances depending on the type of account. So if you debit an asset, you're actually increasing the asset, meaning you're adding money to the bank account. If you credit an expense, you're actually decreasing an expense, which usually only happens if you are maybe doing a return on something. That makes sense. You're getting a credit on that. So if you are going through and putting in let's say a deposit, think about how that is. You've received this money, so your amount of income that you've received has increased. So that goes into this credit here. And if you're depositing, if you're depositing into a bank account, you're increasing that asset. So you've increased the asset, you've increased the income. Those balance each other. This is what's called T-chart accounting, where both sides of this, if you look at it like a T, it's almost like a cross, which in our church we're very familiar with, obviously, but that T-chart means that both sides of the chart equal. So let's take a look in Ledger how that might work for a journal entry. So let's say this is weekly offerings for first week of November. Let's see. I forgot we have a character limit. There we go. And so we'll say, okay, the first week of November came in this way. We're depositing it on Monday the 12th. Now, payee is optional there. If you want to track the payee, you can. For journal entries, you don't often do that. So remember our T-chart. We were we're making this as a deposit. So let's say that all of the money that we receive for offerings is going into the checking account. So we have checking, and then we have general fund offerings. Where did that go? There we go. I scrolled right past it. So we are going to debit our checking account by, let's say, $1,000, and we're going to credit our income account by $1,000. So we're increasing both of these. These two sides of the equation must balance, and once they balance, you see that it's green there. This is a valid journal entry because it balances. Now I can save that. So if I click Save, the journal entry is processed. You can see now my assets go up by 1,000, my income goes up by 1,000. So it's straightforward when you think about it, but I know if you're a volunteer church treasurer or somebody helping with the church finances, that can get a little complicated. That's the most straightforward transaction we have, and we had to kind of think through that. So what we've done in Church360 Ledger is we've created transaction paths. So if you go to New Transaction, let's go to the deposit transaction here. So you get a slightly different screen. You have the same memo. So let's say, let's go back to October and say offerings for last week of October. We'll go and update our date and say, all right, this is on November 5th for the previous week. We can say, all right, first you need to pick an asset. That's what the path is telling you. You're making a deposit. Where are you depositing this money? So it limits your choices to savings and checking, only your asset accounts. So I'll say, okay, that's savings. So how much are you putting into savings? Well, if I look at my deposit, I've got $2,000 there. Then you have income. Now, it might be that your entire income came from the general fund. All you have to do is say, where did this money come from? And it balances it for you. So there we've got the 2,000 and the 2,000. But let's say the offerings were only 1,500 from the general fund. This now tells you here, oh, you need another line to balance this out. So you can say, all right, well, we had offerings given to the missions trip, but that was only 200. So we had 1,500 for general offering and 200, for the missions. So that means there's 300 left. And we'll go under income and say, all right, what other income did that come from? This deposit is being made. We have $300 of income not accounted for. Well, that might be just donated to the youth group. Now it balances. So you can see there on the bottom, we've got this total, 2,000, 2,000. We are debiting our savings account to increase that, and we are crediting our, we're debiting our assets to increase that, and we're crediting our income to increase that. So it does that for you. So if you look up at this top half, that's all you really need to know, because everything else is being done for you, that T-chart accounting. This is how we help prevent mistakes. We say you pick an asset, you pick an income, they need to balance out. We'll help you with the math. We'll even tell you how much you're missing to make it balance, and then you can save that. All right, so we're increasing our assets, we're increasing our income. What if we have a transaction that we have to pay out? So if you go to New Transactions, you can see there's payments and checks. We'll do payments first. So this one, let's say we're paying the electric bill. So we say electric bill for November. We'll just put today's date in there. Now we need a payee. We need to track who this is being paid from. Well, around St. Louis, it's Ameren UE is the name of the payee. When I can go ahead and create Ameren UE here just by typing it in. And then we'll say, all right, we're taking it out of checking. We're going to use our debit card. Let's say it's $250, and the expense is electricity. So what we have done is we said, where are we taking the money and what are we paying for? It gives you that path already, and it does the debits and credits automatically. We're going to credit our checking account and debit our expense account, because if you look here, if we credit an asset, it'll decrease it. We're taking money out, and we're debiting our expense, which increases it. We're tracking that we have paid this expense. So it does a nice balance right there. There we go. So those two sides balance correctly, because we are decreasing our checking and we're increasing our expense. It's different than when you want to increase both sides, but the debits and credits balance. So maybe this is a monthly bill. We could go ahead and save this right now, or we can say this is occurring regularly. So we can say make recurring. So we'll just call this electric bill. And it happens every single month on the, let's say, second Monday. And we'll save that. So what that means is that then under our recurring transactions, we have this account or this bill that'll come up every month, and it's going to show up as an expected transaction. When it shows up, there'll be a little icon here, and we can go and process that. Let's say that it's a one-time bill and we're just writing a check for that. That's a new transaction called check. Now, checks operate in the same way as payments, except for the fact that we're printing a check. So we'll go through the same thing. Let's see, who else did we have before? We had internet. So let's say this is our internet bill. November internet bill. The payee, we'll go with AT&T. So we're going to take it out of our checking account. We're going to say this month we'll do $225, and that's going to go out of internet. So there's our checking account, and it's going to give you a little alert depending on where your account is at that time. So we have this kind of look of the check that shows the credit and debits are showing down here to make sure they balance. And then we can save this. We don't have to put a check number in yet. Maybe we don't know about this because we're queuing checks up to print it one time during the week. So I'll hit save. The check was added to your print queue. Now that is this up here. You see we get a little 1 there. If we go to the print queue, there's our transaction. Now we can either mark it as printed. Maybe we're just handwriting in our checkbook and we know what it is. Or we can print it out from our actual printer. You can use checks from Forms Plus Inc., our partner out of Atlanta, and they will match up perfectly. So if we go and click print, it'll say, all right, this is what we're expecting to print. Does that look good? The middle, it's a top check with the middle and the bottom portion just showing details, one for us, one for them. When we click print, it'll say, all right, what check number do you want? So maybe it's check number 789. We click that and we confirm it. And now it'll show up to print directly from our browser. There we go. We can print that out. It won't print all the other details because those are pre-printed on the check. All right, we will cancel that and we'll say, all right, this is marked as printed. One check will be removed from the print queue, confirmed. And that's now out of it. So now when we go back to our main account, we can see here, there is the check. Let's go ahead and take care of a payment real quickly. We'll go and do this month's electricity. I wanted to show that reoccurring, but I want to show you how to edit a transaction. So Cameron UE, it's coming from checking. It's $250 going to electricity. So what we did before, we'll go ahead and save that. We're paying with our debit card out of our checking account. There it is. Now let's say we typed in 250, but what we actually paid was 245. Well, we need to go and edit that transaction. And if you're an accountant watching, hearing that phrase, edit the transaction, probably makes you cringe because it's not appropriate to edit a transaction, even for mistakes. But that's what we're going to do, and I'll show you how it works out. So we'll click on this transaction and say, nope, that was actually 245. And we'll save that. We can even add a memo saying typo on amount. And we'll click save. All right, it has now changed to 245. Now, for all of those of you who are considering embezzling, that is one way to potentially hide your embezzlement, but not in Church360 Ledger because we didn't actually modify that transaction. What we did is we created a new journal entry and attached it to that transaction. So you'll see here, it's hard to see, I know I'm unsure on your screen, there's a little red arrow there. When you expand it, it says it was edited on this date for $5 and shows that difference. So there's no hiding that that transaction was edited. And then if you go up into our reports under event log, you can see actually what I did was I created a new transaction, a revision of this transaction. And the new transaction is just simply a journal entry that credits and debits $5. So we've adjusted that transaction by creating a new transaction and linking them together. So that's pretty exciting. Let me show you a couple things. I'm going slow. I apologize. It may not seem like that. There's a lot to cover, but I'm already at 48 minutes. We don't have questions in the queue right now, so I'm going to keep going. There's a few key things I want to show you. First off, let's say we have a deposit and we want to make sure that money for the youth group goes to the youth group. We'll go back to our chart of accounts and we'll do what's called create a restricted fund. So under checking, we can do a new restricted fund, and we can say youth fund. Actually, no, I'm going to do this under savings. Under savings, we'll do a new restricted fund called Youth Ministry Fund. I will click submit. What this has done is it has created unrestricted savings and a restricted savings. So there's my Youth Ministry Fund, and unrestricted is just meaning it's not assigned. So I'm going to save those changes, and then we're going to do a transfer. So if you remember correctly, we'll go into, actually, we're going to go right here to youth group offerings. We had $300 come in for offerings. That was deposited into our checking account. What we're going to do is we're going to move that $300 into savings. So we'll do a new transaction called transfer. And we're going to take it from our checking, $300, and we're going to move it into our youth ministry savings fund. So this is taking one asset and moving it to another asset. Once I selected an asset, it only allowed me to select other assets. So now I can save that. And I'm going to do a quick refresh to make sure my balances update. Sometimes when you go to the chart of accounts page, it's cached the information, so we'll want to see that. We'll go to chart of accounts. There we go. So now, out of everything, we've already made some payments and other things. You can see our youth ministry fund has $300 in it. That's our savings account. We don't have anything unrestricted right now. So the total is $300 there. And the Bank of Bakersville as a whole has $530. You can also see this if you go into your chart of accounts reports. Underneath reports and chart of accounts, you can see all of the balances as of right now. We're doing it for the whole year. And also change that date and show me just quarter four. What did quarter four start at? Where did it end at? Everything we've done so far has been in quarter four. But this shows you your current balances across all accounts and how they roll up. And in fact, you can even roll them up by minimizing some of the details in there. All right, a couple more things before we wrap up, because there's still a few things I haven't shown you. First off, under assets, when you get to an account, not a restricted account, so we're going to go over to savings, youth ministry fund. Let's see. Oh, let me go back here. Savings, when did we do the, I guess we did the savings under the offerings. I was thinking we did that under checking. Let's go back under checking. Oh, I bet you that I know what happened. Okay, what I want to show you though is when you get to the account, you go to checking and you can click reconcile. And what that reconciling will do is how you balance it with your bank account. So you take your bank statement that you get on a monthly basis, whether that's printed or electronic, you put in your starting balance, and then you put in your ending balance. And so let's say we started with 0 and we ended with 230. Well, we have a number of in and out, but as you check off your transactions, it will do the math and tell you, okay, this is everything. So you look at each transaction on your statement, find that here, and check it off. If it doesn't balance at the end, that means you are either missing a transaction in Ledger or missing one on your bank account, a transaction you thought happened but didn't do it yet. This is a way to validate that everything matches correctly. So then you can hit save, and once you hit save, all of these transactions are locked. You can't make any more adjustments because you've reconciled that account. So I hope that makes sense. It's kind of like when you're balancing your checkbook. You're just making sure that everything has been caught. The last thing I want to show you, and I apologize for rushing through some of this, is our reporting. Our reports have our standard reports, so general ledger report, which shows all of your different line items, and you can group it or filter by things like type or payee or account. You have your income and expense report, which shows all of your income less your expenses for any given time period. We talked about chart of accounts. Your balance sheet is similar to that, where you have a starting and ending balance just for assets and liabilities, whereas your chart of accounts is for all of them, and it shows the changes that occur. We also have the event log, which we talked about briefly before, but it shows every single action that occurred, when it occurred, what type of action it was, and who did it. So you can see all of those details there. So creating accounts, changing account amount, budgeting, all of that stuff. So we track all of these actions so that you can always go back and see who did what. All right, well, we are almost out of time. I don't have any questions in the queue right now, so if you have any questions for me, go ahead and enter them in. I know I covered a lot of information, and there's still plenty of things that we can show. But before we get to that, I do want to encourage you, if you haven't already, you can sign up for a free 37-day trial at 360ledger.com. And if you're interested in getting started, you can speak with me or one of our software consultants. We have different software consultants for different states, and they can help you out and help you get started, find out any of your needs, any questions that you might have, and get answers for you. So I hope this was helpful to you. I know that there's so much information taken at one time, and I tried to show as much as I could without overwhelming you. But I think the main point is that Church360 Ledger is a simple tool that helps you and helps your ministry team, whether that's staff or volunteers, track all of the finances of your church in an accurate and easy way, because church finances aren't always easy. We try to make it as easy as possible. So I'm looking at the queue. I don't have any questions, so I'm going to go ahead and wrap up here. Thank you so much for attending today, or thank you for watching the recording. Feel free to reach out to us at any time if you do have questions that come up afterwards. Have a great rest of the day.